If you've ever scratched your head trying to figure out crypto taxes, you're not alone. You probably clicked on this video wanting that answer. For starters, crypto isn't just about buying and selling. It's a dynamic space where assets can move, transform, and generate in diverse ways. Visualize a stock market on steroids, where your shares aren't just bought or sold, but can also be transferred, wrapped, staked, and more. In this video, I'm going to break down exactly how to report your crypto on your taxes step by step. Make sure to stick around until the end, because knowing this information could save you from a future audit. First, you need to understand how crypto is categorized in the United States. Crypto earnings can be categorized into two distinct types: capital gains and ordinary income. Investing activities, which include actions like buying, selling, and exchanging cryptocurrencies, typically result in capital gains income. For instance, let's say you purchased Litecoin for $8,000 and later traded it for Bitcoin when its value had risen to $10,000. In this scenario, you would have realized a $2,000 capital gain. This gain, derived from your investment activity, is classified as capital gains income and should be reported on your taxes as such. If you're on the earning side of cryptocurrency, be it through employment, mining, staking, or receiving interest rewards, this typically falls into ordinary income. Imagine you earned 1 Bitcoin throughout the year as a reward for participating in a mining pool. In this case, you would need to report the equivalent US dollar value of the 1 Bitcoin as ordinary income. The first step when reporting is collecting all of your transaction data. You can gather all of your historical transaction data manually by downloading the gain and loss CSV files from all the exchanges that you've used. You can compile them yourself or use a crypto tax software that will make everything nice and neat for you. Just remember, while crypto tax software is easy to use, it still isn't perfect. Once all your transactions are in one place, it's time to calculate your gains and losses and your income from each taxable event. A taxable event is any scenario that triggers a tax reporting requirement, such as selling crypto for fiat currency, trading one cryptocurrency for another, or for instance, using crypto to purchase goods or services, or even earning cryptocurrency. Now, let me pass it over to our calculations professional, George Shakro, and he'll show you how to determine gains and losses.
Thanks, Andrew. Calculating your capital gains and losses is a smooth and easy process. The initial amount you spend to purchase an asset is known as the cost basis. The amount you sell the asset for, we use the term proceeds. The disparity between the cost basis and the proceeds represents your personal capital gain or loss. For instance, if you buy Ethereum for $5,000 and later sell it for $3,000, then you have a capital loss of $2,000. Capital gains are classified in two distinct brackets for tax purposes. The first category is short-term gains, which are taxed at the same rate as your regular income. Short-term gains are assets that you've held for less than a year. If you bought something in January, then sold it 3 months later in March, that would be considered a short-term gain. The second category is long-term gains. These are assets that are held for more than a year. Long-term gains are beneficial because they are taxed at lower rates than your regular income. So if you were to buy Bitcoin in January of 2021 and then sell it in February of 2022, that's a long-term gain. Now, let's toss it back to Andrew.
Thanks, George. Finally, it's time to report your crypto transactions on the appropriate tax forms. Capital gains and losses from cryptocurrency trades are reported on IRS Form 8949. Sum up all of your trades to calculate your net gain or loss for the year. For ordinary income, such as earnings from mining or staking, you'll report this on various tax forms depending on the nature of the income. This could be Schedule C for self-employment income or Schedule 1 for other types of income. After completing your tax forms, they're ready to be filed with your tax return. Side note, while the basics of crypto taxation may seem straightforward, there are a lot of intricacies to consider. Factors like hard forks, airdrops, gifts, inheritances, lost or stolen coins, these can all complicate your tax calculations. Additionally, tax implications can change based on jurisdictional regulations. We might have made this process seem easy, but sometimes it's not the case. That's why sometimes it's best to reach out to a tax pro, like the ones at Gordon Law Group. That is a simplified step-by-step version on how to report your crypto taxes. Was this video helpful? Leave a comment below. I'm Andrew, and I'll see you in the next one.